You pay taxes to the government, but once that money comes in, the government has to make a choice. Should it spend to keep things running today or invest to build for tomorrow? That choice lies at the heart of the budget and it shapes the economy's future. In the union budget, government spending is split into two broad categories: revenue expenditure and capital expenditure. The difference between the two is not just accounting, it determines whether public money is used to sustain the present or to create long-term growth. Revenue expenditure is the government's day-to-day spending. Think of it like household bills. It includes salaries of government employees, subsidies on food, fuel and fertilizers, pensions, interest on past loans, and routine maintenance. Now, this spending is recurring. It does not create new assets, nor does it reduce the government's liabilities. It keeps the system running, but by itself it does not build future growth. Capital expenditure, on the other hand, is investment for the future. It includes spending on roads, railways and ports, hospitals and schools, defense equipment, and digital and core infrastructure. It also covers loan repayments that reduce government debt. Capital spending creates assets that last for years and support long-term productivity. Now, governments closely track this split because capital expenditure drives long-term economic growth. And that is why recent budgets have steadily increased allocations for infrastructure and asset creation. Revenue spending remains essential for social stability and basic functioning. But when it dominates the budget, it can signal inefficiencies, widen fiscal deficits, and push borrowing higher. This balance is central to fiscal discipline. You should care because it directly affects your everyday life. Higher capital spending usually means better infrastructure, more jobs, and faster economic growth. Excessive revenue spending can mean higher future taxes, less money for development, and slower economic momentum. Your commute, career prospects, and investments are all shaped by how the government strikes this balance. So in Budget 2026, don't just watch how much the government spends. Watch where it spends and how much is being invested in long-term assets versus day-to-day expenses. This balance is guided by a rule that limits how much the government can borrow and spend, and that rule is the FRBM framework. In the next episode of Budget Basics, we explain what it is and how it controls government spending. This is Budget Basics by Business Standard, breaking down the budget minus the jargon.